If you thought the housing market was bad before, just wait, it's gonna get worse. And if you don't know how to navigate it and position yourself to end up being on the winning end, then you're gonna be on the short end of that stick. So in this episode, we're gonna be talking about some things that you might not even be aware of that are driving up cost in the housing market and driving up costs for you to just be able to get into a house and purchase a home. And we're also gonna talk about some things that you can do to better position yourself to be able to win in this housing market as well. So in 2020, home prices started going sky high with the pandemic. There was a huge demand, interest rates were super low, and everyone was rushing into the housing market to try and purchase a home. Home prices, as they were going up and up, there were a lot of analysts, a lot of people who were speculating that we were in a housing bubble and that the housing market was just gonna crash at some point. Well, we are now in 2025 and there has been no crash. Home prices are still increasing. Not only that, home prices are projected to continue increasing at a rate between 3 to 5% year over year for the next 5 years. So what does that mean for you and what's driving up these home costs? Well, let's dig a little bit into it. So one thing that I want to point out, which is a big thing, is insurance. Insurance costs have been skyrocketing. I'll pick on Florida for a minute. In Florida, I'm also licensed in Florida, so I'll pick on Florida for a minute. In Florida, there are a lot of homeowners insurance companies that have actually stopped doing new policies for Florida because every few years, Florida gets smacked with a hurricane and insurance, that's when they lose a lot of their money. So insurance, as with many businesses, is a for-profit business. So they are in the business of collecting insurance payments, collecting premiums, and then paying out as little as they can pay out so that they can make a bigger profit. Well, in Florida, every few years, you've got hurricanes that come through and cause a whole lot of damage throughout Florida. And that causes insurance to tend to be higher in Florida, particularly in some areas of Florida. And so for that, you have some insurance companies that have decided not to do business in Florida anymore. So that's one thing. You've got insurance. Homeowners insurance in general across the nation, though, has increased. So as a mortgage loan originator, one of the things that I have to do is I have to estimate insurance costs for individuals when I'm quoting them about how much their monthly mortgage payment is going to be. Now, we get those numbers exact once they start shopping around for insurance and I know exactly what they're going to be paying. But one thing that I've noticed over the past couple years is that insurance, what I used to estimate for insurance, started out at one level and it's just been gradually increasing a little bit higher, a little bit higher, a little bit higher, to where now I'm estimating, $50, $75, $100 more than what I used to estimate for insurance, because insurance costs, those monthly premiums, they've just been increasing more and more and more. So insurance has been getting a lot more expensive. I don't know, I'm not in the insurance industry, so I don't know all of the things behind that, if it's really all the natural disasters that have been happening. I know we've got wildfires happening out in California that can raise prices of insurance there because those cause a lot of destruction, and insurance companies end up having to pay out, millions, if not billions of dollars to help, restore some of what's been damaged. So I don't know all of what's causing the increase in the drive up of the insurance costs, but I do know that insurance costs across the board, across the nation, whether you're in a natural disaster area or whether you live in an area that doesn't experience much inclement weather, insurance costs have been creeping up there. So that's one thing. But another thing, taxes have been increasing. I've started estimating higher amount for taxes as well when people are getting into homes, because counties have been increasing their tax rate. There have been a lot of complaints from residents in the city and county where I live in, because you've had some people that have experienced, a couple $100 a month an increase in their taxes. Well, if you're someone who doesn't have a lot of disposable income and now all of a sudden you're having to pay an extra $200, $300, $400 a month just in taxes on your mortgage payment, that's something that is really going to affect, your lifestyle is really going to affect how you're able to get things paid for on a day-to-day basis. Maybe you have to make some cuts just so that you can give the government more money. And we already know no one likes giving the government money because they waste a lot of it, and everybody knows this. But in any case, we know there's also a need for the government to be able to have funds to provide things that we do utilize on a regular and daily basis as well. So enough with that in taxes, but you got the insurance, you got the taxes. Another thing that you are not going to be aware of, because most people don't even read this within their all the charges of what they're getting charged on their loan sheet. And even then, if you read it, you wouldn't know the difference. But credit costs have been increasing. So as a mortgage loan originator, when we pull your credit report, when you close on your home, you end up paying that cost back. So a loan officer will pull your credit because that's what they need to do in order to qualify you to be able to purchase a home. When you do close on that home purchase, in that closing disclosure and all those charges that are listed there, you'll have credit report fee as well, because you actually pay for that credit report. Now, if you never close on a home, that's just a cost that most lenders end up eating because you didn't close on your home. So the lender just has to eat that as part of their cost of doing business. But when you close on the home, that's part of those closing costs that you end up paying. Closing or credit report fees have been increasing a whole lot, which is why you have a lot more mortgage lenders now doing soft credit pulls. Previously, soft credit pulls weren't as big of a thing. They were a thing. You could always do a soft credit pull, a pull that did not affect your credit score. But when you went to go get qualified to purchase a home, or a mortgage lender was trying to qualify you to purchase a home, most of them would just do a hard pull. But soft pulls don't cost quite as much. Now, a soft pull is not something that a mortgage lender can completely qualify you on. But since the majority of people who go to a mortgage lender to get their credit pulled to see if they can qualify to purchase a home, the majority of people don't see it through all the way to the finish line. The majority of people will never make it to the closing table. They get their credit pulled, maybe they fill out the loan application, they start the process, but then they stop the process, or they get pre-approved, but then they never go out there and find a home. They haven't adequately prepared with saving up the money that they need to save up in order to pay for down payment and closing costs, whatever it is. The majority of people that a loan officer comes across are not going to make it to the finish line. So there's a lot of credit reporting fees that the loan officer, or the mortgage company rather, just ends up having to eat. They end up having to take that hit. And the majority of the credit reports that get pulled, the mortgage companies have to take that hit because most people aren't going to make it to the closing table. That being said, credit reporting fees or credit report fees have been increasing a lot, and that is weighing heavy on the mortgage companies. And despite what many people may believe, mortgage companies aren't just rolling in the dough. There have actually been a lot of mortgage companies over the past couple of years that have had to shut their doors because they're just not profitable. They're not making enough money to stay in business. And with credit reporting fees going up, or credit report fees going up, the cost to pull a credit report going up, rather, especially for a hard pull. A lot of mortgage companies now, you can find them very easily, mortgage companies that will do soft pulls, because since they know, like I said, that most people are not going to see it through to the end, it's much cheaper for a mortgage lender to do a soft pull on your credit, which is not going to affect your credit score. It's not going to cost them as much. And if you are that person that's going to end up seeing this thing through until to the closing table, then that'll be something that, you can, you'll end up paying back or whatever. But for the most part, for all those fees they have to eat, they can kind of reduce their cost there. So a lot of things have been going up. The cost of homes have been going up, not just in resales, but new constructions. Look around at some of the new constructions that are in your neighborhood now. A lot of them are starting out at the 350s, 370s, 400s. It used to be that when you had a new construction neighborhood, I remember driving around and seeing a new construction neighborhood coming up with homes from the 200s, homes from the 250s. But now you've got homes from the 350s, homes from the 400s. They're building homes that are of lesser quality. The materials aren't even as good as what they used to use to build homes. They're putting them really close together, whereas you used to have neighborhoods that were built that had character. Each home looked different from the next home. Now every home looks like the one next door, and all the same homes, all the homes on the street look very similar, if not identical. They all are on a small patch of land. You barely have any yard because they're trying to just pack as many new construction homes into one area as they can possibly pack in there. And then they're not even using good quality materials. So you could end up with issues much sooner than what you would have for some of the homes that were built, 2 or 3 decades ago. So these are some of the things that are also, I can't even explain the increase in costs with the new construction homes today, because the material, a lot of the quality is not even as good. I've talked to people who've purchased new construction homes that have issues in them. I've seen videos of inspectors, and you could probably find these videos as well if you were to just scour social media for like 2-3 minutes, of inspectors that go and do inspections on new construction that find issues with new constructions, brand new builds that no one has lived in, but they find issues with the homes. It might be gaps in the roofing. It might be issues with the siding. It might be some things that were wired wrong. And these are brand new homes. So and I'll pause there to say, if you are looking to purchase a new construction, if you are interested in buying a brand new home, don't assume that just because you're buying a brand new home, you're getting something that does not have any issues. Have a home inspector do an inspection on that property. And the reason is because there have been a lot of issues, a lot of people that have discovered issues, discovered things that were wrong with their new construction home. And come to find out, if they had had a home inspection done, some of those issues would have been revealed earlier on. I've spoken with home inspectors who actually prefer to do home inspections on new constructions before they put the drywall up, because if you get the home inspection early enough in the building process, that home inspector can see behind the walls. They can see how things are wired. They can see how things are coming together, and they can better advise you or better complete their report on all of the things or issues that you might need to be aware of with this home. But if you wait until the home's complete and then you have a inspector go in there to do the home inspection, that inspector can't see behind the walls. They can't tear open walls and see how things have been wired or see how things have been put together. So you're at a slight disadvantage. So you've got an opportunity, if you're doing a new construction and that construction is not finished being built yet, you have an opportunity to have that home inspection done and then have a more detailed look at that home from a professional set of eyes. And so that's what I recommend if you are looking at doing a new construction. But also, don't just take it that I'm getting a new construction, there's no issues with this house, everything is great. In a lot of cases, I'll say in most cases, that is the case. However, there are those cases where that's not the case. And you don't want to just hang your hat on, I'm gonna be like most cases. You want to make sure that you do your proper due diligence as well. But that's another thing that's driving up home prices is new constructions, and the cost of building materials are going up. Everything is going up. The cost of, I was going to say rents, it's not rents, but the cost of pay is going up. Income is going up. So when these homes are getting built, when people are working on these homes, with the cost of goods and services going up, and everything else that goes up, even things that aren't related to housing, cost of food is going up, cost of gas goes up, cost of utilities goes up. All of those things affect the cost of living. So therefore, wages need to increase. And when wages are increasing, that's going to also increase everything else with you purchasing a home. That builder needs to get paid more because they need to make more money so that they can afford to live in the same world that you live in. So their wages are going up. When you have to have maintenance done, maintenance costs are going up. Everything is increasing. So you get the gist by now. Everything's going up. What is the solution? Buy as soon as you can. That is the answer. And I'm going to break it down for you in about 2 minutes, and then we're going to wrap this thing up. So if you've got cash sitting in the bank, that cash is losing value every single day. $1 million sitting in the bank today Next year, it's still going to be $1 million, but it's going to be worth less because you can purchase less with it because the cost of living is going up. Inflation has gone up. And so because of inflation, because of the cost of living going up, $1 million today is going to be worth less than $1 million next year. Because of that, you want to purchase as soon as you can, investing your money into a asset that is appreciating in value. If I had $1 million today, one thing that I would do is that I would buy an investment property, or I would buy an apartment building, because I would want to put my money in something that is going to appreciate in value. The asset that I'm buying is getting more valuable over time, and it's income producing. I'm getting rent from the tenants that live in that apartment or in that house or duplex, whatever it is. I'm getting money from the tenants that live there. And so I would buy an income producing asset, an asset that's appreciating in value, but that asset is also providing me income. And with the income that I'm making from that asset, I would save it up just until I had enough to purchase another income producing asset. And then I would wash, rinse, and repeat the cycle all over again until I had a whole bunch of income producing assets that can now draw in enough money to help me be a blessing to other people, help me to be able to take care of my life and my children as well, and provide for, the needs of others as well. So that would be my goal. That is what I'm recommending to you, to get out in front of this thing, because one of the things, and I'm not talking about it in this episode, but I am going to be discussing this next week, is America becoming a renter nation. So you definitely want to stay tuned for next week's episode, because we're going to be going deep into what I'm seeing and how America is moving more and more toward becoming a renter nation. It's something that a lot of people are trying to fight against. A lot of people in the real estate industry, a lot of people in the mortgage industry, some people who are not in those industries that are trying to fight against it. But it's a chain of events that are happening, and I'm going to be discussing a lot of what's going on that's causing this shift. But what you need to know right now is to get out in front of what's happening right now with the increase in home prices and the increase in everything. You want to purchase a home as soon as you can. Now, there are a lot of people that will say owning the home that you live in is not an investment. I disagree. And I also believe that owning the home that you live in, owning an asset that's appreciating in value, even if it's not cash flowing or producing money for you or revenue for you, that's still better than having money that's just sitting in the bank. Having your money in something that is growing in equity, growing in value over time, is still going to be better than you just putting your money somewhere where it's just being stored up and it's depreciating over time, because that's what money does when it just sits in the bank. If you notice how wealthy people move money, they do exactly that. They're moving their money from one place to another place, because money that's just sitting stagnant in a bank account somewhere is not doing anything but depreciating in value. So I highly recommend, you want to get out in front of this thing, make purchasing a home in 2025 your priority. Make it your goal to push aside whatever else you need to push aside, to do whatever it takes, whatever you need to do, so that you can ensure that before December 31st, 2025, you are a homeowner. Whether it's owning an investment property or owning a primary residence, you own something that is going to be appreciating in value, because homes are going to continue to go up. Insurance is going to continue to go up. Taxes is going to continue to go up. And you're not sheltered if you're a renter. If you're a renter, you're going to be feeling the brunt of everything, because that all flows downhill. Like those costs that I told you are going up on the mortgage side of things with the credit reporting fees, those costs are getting passed along to the buyer. The insurance going up, you're going to end up paying higher insurance. But if you're a renter, you're just going to be paying higher rents, because if a landlord or an owner who owns a multifamily property, if their costs start going up, your rent's going to go up to compensate for the increase in their cost as well. So you're not sheltered if you're a renter. You're going to be feeling every bit of that increase in all of the goods and services that we've talked about. So what you need to do is make sure that you are the owner. Make sure that you are doing everything you can to purchase a home this year so that you at least have something you own that's appreciating in value, and from there working toward owning something that's also going to be cash flowing as well. So start with the cash flow, start with the appreciation, but just get started. That's what I have for you. Thank you for taking the time to tune in. As always, please do check us out on Tuesdays live, 7 p.m. for Home Finance Hacks, bringing you all the tips and tricks and tools that can save you tens of thousands of dollars when you get ready to purchase that home. So really good stuff that I push out on Tuesdays. You can catch the replays. Just look in the playlist and you'll see the Home Finance Hacks playlist in there, so you can catch up on the replays if you missed the previous weeks. But please do check it out. See you here again next week. Take care, be blessed, and we'll see you in the next episode.